right, welcome to 372 edition of Invest Trading Academy live with Ambrose. Yes, I would say that the global market has opened on a positive note on the strength of positive macroeconomic data like emanated from China, US, and UK and other domain. This has kind of boosted investors' confidence and sentiment this morning as trading has opened in many of the markets across the globe, as I said earlier, in the green. Good news for the market, and this has a lot of what further cooling of US inflation and also that of UK. Also, seeing that the number that emanated from China, especially the industrial output and the retail sale that beat expectation in terms of growth within this month of for month of October. And this is a sign that the second largest economy is recovering. And don't forget that other economy or other market economy has linked with what with China. Once we are seeing that China economy is finding its feet, also government of China is also injecting liquidity to the system. And how do they do that? Not just giving cash to them, by what by further reducing rates to provide cheaper liquidity for business to have access. This is also part of what has kind of boosted confidence in Asia, in Europe, and also in US. Seeing that US inflation data that came better than expected in terms of weak inflation figure that signal that the end of Fed rate hike is already at the corner. And don't forget that Fed have on their own side, they're going to depend on what on macro data to report for their work for their adjustment and up. If for the month of October we're seeing that inflation has further moved to the southward for the first time below the the benchmark set by Fed himself. As we speak now, I think it's about 3.9. While Fed about 4.2. You can see that US market inflation or US inflation, sorry, has come below what Fed was also forecasting. For me, it's a good news for the global economy, despite the ongoing geopolitical tension in Gaza and Israel, and at the same time what is happening in Ukraine and Russia. But I believe that this is a sign that yes, we might see a better global forecast of global growth in 2024. But if I say if, why say if that what is happening in Ukraine, Russia, and Gaza and Israel might also change the momentum or change the scenario. But as we speak now, it's a good news that we are seeing that all this cooling inflation is a sign that most of the mature central banks also will start cutting. But the cut is what everyone wants to wait. When is it coming from next year? Because I tell you, since July this year, we have seen that there's a sign. Even when Fed have paused more than 2 times within this year, but we have seen already that inflation started cooling down in US, which is a good one. But let's see how far this market economy also will go in terms of what responding to this positive macroeconomic data that we are seeing in that environment. It's a good one, and I believe that this also have a way of also influencing our market. But this is a lesson for us here in Nigeria. We have seen that where policies implemented and followed through, the impact is what we are seeing in UK, we are seeing in US. Also, yes, we are seeing also improvement in China. But for here in Nigeria, I don't know what we're going to do. Are we going to use our interest rate to attract them? In US, we are seeing that yield has started coming down. Why as crude oil price also continue to remain a bit stable or looking southward? That has supported what inflation on the decline. We see the price of goods and services in the US also coming down. Even price of gas or gasoline are coming down. What are we doing here? Are we trying to influence chase inflation in Nigeria, which we know that our inflation is not a result of liquidity push inflation or front foot inflation, but our own is cost inflation. What are we going to say? We're going to autonomous war of what we read in school, that when there is inflation, you start increasing rate. We have done it in Nigeria. Where has it taken us in terms of what checking inflation? Because our inflation is not liquidity push. It's a disconnection for what policy from the physical and the monetary policy, which they need to work together and see how they can align together. I think that is where we should go in Nigeria, because as we speak now, as we are seeing yield on increase, and we want to increase interest again on the market, we are going to either you sacrifice your economy for one international investor or for investors in the economy, in Nigeria economy. Then the economy, you have to choose. You have to choose the economy, or you choose to attract foreign investor or to attract the financial market. What all depends on what is the new central bank team is ready to do. Is it at the expense of economy to bring funds to the economy? If not going to determine and nobody's having access to that fund to drive the economy, is zero. For me, I believe that this is the time the team of CPN, the new team, to also sit down and look at all these and find how they can start putting plan. It cannot be overnight, but let's see where they are going, because I tell you, the global economy is going for what? Going for a lower rate to drive the economy. If Nigeria want to go otherwise, we are waiting to see next week meeting from MPC Nigeria to know exactly where they are going. This is my own submission, but I believe that there is potential for our market to do well, and at the same time for the economy also to strive well. These are what is happening as we speak globally, but I believe that investors should not panic at all. Since we are seeing most of the companies earnings, even as we speak now, across this zone, we are seeing a better numbers also coming that also support this mature market. And I believe that our market will not be left behind. Now that our market is making new highs here in Nigeria, Asia to speak now is already in green. European market is higher in green, US also in green, and Africa is also mixed as we speak now, while Nigeria market is also green. That it tells you that as a trend we are seeing, we saw what happened on Monday when the sell-off or profit taking in BUA put the market down. That day we saw a positive market bread, but the market index was down, and we saw almost like a sell pressure in the market. But on Tuesday we saw a reversal, more demand for what? For stock. We see numbers of stock gaining about 33 stocks, against 16 that on the loser side. This morning that trend has continued also in Nigeria. For me, it's a good market for us. It's just left for us as a nation to know where we are going and also implement policy that will drive the economy. We don't need to say because we want to copy what Mr. A is doing. If you look at what is peculiar to our economy and also do it right. But for those in equity market, don't be carried away with that stock market. Understand that yes, as we are seeing high yield in the fixed income market, I tell you that it won't continue, because if CBN or the monetary policy want to please the investors by hacking rate, they know that they're going to sacrifice the economy for that. For me, don't believe that once the rate is coming down, it's going to be a plus for work for the companies in Nigeria, because cost has already suffocated a lot of companies that if they're not taking, they will likely them closing down. But we have seen most of the company performance beating inflation recently, that have given the market an edge, that what we are seeing as a return in other window remain red. Even when we sent the option that we saw from the bond market, the option that we saw from the TB, all of them we have seen an increase in their yield. But once all eyes was on inflation today, we have seen the inflation that came from other mature economy, they are cooling down. But let's see how but with all the focus, I think that is going to still move up to around 28 or 27.1.7. 27.5 for this October we are looking at. Let's see, and if it goes to that level, further deepening what return of the negative return for what for those fixed income market. Why equity already is about almost 38.28, far ahead of what of inflation, and companies on the exchange that return more than what we are calling inflation. We are seeing companies that return more than 800, we are seeing 100%. Even those that attended investment data class for December 2023, December last year, I will tell you that average of a portfolio of 10 stocks are giving us 103 return on average. Some of the stocks they have given us 400, 50, all of them. For me, it's a good one for them that it's only equity space you can earn against, but you need to do it wisely. Don't fall in love. Know when to take your profit, and also when to protect that your profit wherever we are putting. That's why the coming market investment 24 is for really for us to know how to diversify our economy. As we have seen our market rally for almost 4 years, I've seen it. That means market cannot continue. Yes, the point of the market to go is there, but don't be carried away. Factor in as you are edging against inflation, also edge against down market by what going into defensive stocks and those stocks that have the potential to grow, that will support their earnings and their payout, that also drive their price. These are how to invest as we speak right away. I believe that these are the way we should also start looking at what is happening in the market. Quickly, want to look at the earnings that we're checking today. We're checking on BUA Cement and also Dangote Cement. We've done justice on Julius Berger and that of Lafayette Waco on Monday. But today we're looking at BUA Cement and that of what Dangote Cement. We'll start from with BUA Cement. BUA Cement, if you look at the scorecard, this is a good number, but I'll tell you the earnings, when I mean earnings, the profit data is a bit flat. But let's check out this number and see what really happened. Look at the revenue for the 9 months, and I mean 9 months, not the third quarter alone. For Q1, Q2, cumulative of 9 months, we have seen that the revenue moved from 262.6 billion to 335.86 billion. That is 28% in the green up, and this relates to what a PAT of 76.1 billion against 74 billion in 2022, and this relates to what a flat figure of what 30% for the period. And I will tell you that this PAT was supported as a lot of what of other incomes that comes to the company operation as a lot of other activities was other incomes, provided about 1.12 billion that was against the 271.8 million in 2022. You can see that this is what, if not, would have seen either a flat number, between the 74, but because of this 1.12 billion, other income that supported this country to post to put this positive gain. But this translates to an EPS of what, 2 naira 25 kobo against 2 naira 19 kobo posted in 2022. But if you look at the earning per share of 2 naira 25 kobo for a stock that's selling at this price and this end of almost third quarter, you can forecast easily that at the end of the year, this company is not likely to post more than what, 3 naira earning per share. And this earning per share, from there, dividend of either 280 or 285 will be expected there. Or for a stock that is selling of what, of almost 104 as you speak right away, what is your position? And if you go and further look at the company profit margin, yes, it has also declined from 28.2% in 2022 to 22.7% in 2023. These are the things which also be concerned. But the good thing is that, yes, they are still in profit, but you as an investor, what kind of expectation are you having? Even though they are paying 250 against the price selling, what is dividend in there? And we have seen that it is not because of performance of this company that I put it here, because of the shareholding structure, and also how the number of float they have that have supported it, not because of performance alone. But it's good that here is rated there, and that also help the market to move to this level. That's why I said that the market are rally on what, based on few highly priced stocks that have moved it, not only on what, on general market movement. But good that market have touched almost 71, came down. This morning the market is heading to another 71 again. If it cross and sustain, good. But this is the state of the market. These are the companies that supported the market. This is why, because of what their movement in the up direction. Then also, if you look at the retained earnings for this company, fine for me, retained earnings also looking up. Fine, we saw a movement from 164.8 billion to 176.13 billion for 2023. Good one. The operating cash flow also is also not bad, still floating on a positive direction. We are seeing that the operating cash flow moved from 129.9 billion to 137.7 billion in 2023. And net assets was also up for this period against the 205.14 billion in 2023 to 392.34 billion. This is the state of the company. I have just told you that you need to look at the earnings. We have seen already at 22 naira, 2 naira 25 kobo for third quarter, and I said focus of what, 3 naira mass or 2 naira 85 kobo, and dividend of what, and what did they pay you last? You need to look at all this, because when we are in this kind of stuff, are they in your portfolio for defense? Because I said here that even though we are earning against inflation, we also hedge the what against downturn. This kind of stock, would they not go down when the market is going down? Is what we should know, because their share in issue is very small. The rate of price coming down is very, very also thin. Very, very thin. Very, very slim. Sorry, very, very slim for the price to go down. For that, if you also know what you are doing, are you doing it in your, are you investing this for defensive in case market come down, or you want to create money, want to create wealth, want to capital acquisition? You also consider when you are looking at it. But all one is look at the almighty Dangote Cement. I will tell you, in the industry or in that sector, this is a leader and a leader indeed. If you look at the turnover or the revenue for 9 months, it moved from 1.18 trillion to 1.51 trillion, present about 28% up again. And this also, the 1.5 trillion translates to 277.55 billion against 213.11 billion in 2022. That translates to what, 30% up. You can see that on the top line of Dangote, the top line and bottom line, you can see a good growth, double-digit growth. And if you remember InvestData criteria for earnings, we said that your top line and your bottom line must be above what, 20% to say this what a standing of quality earnings. I can see that this is a quality earning we are seeing in Dangote with this number. We are seeing the top line and bottom line also. And also, if you look at the profit margin for Dangote, it moved from 17.8% to what, 18.5%. Good news for investors. But earning per share also stood at what, at 16 naira 10 kobo against 12 naira 41 kobo. You can see that there's a good growth here, looking at the figure that we're seeing. But one thing that's also we should draw attention is that if you look at the net assets of Dangote, for this period, it moved from what, from 838.22 billion to 1.37 trillion. You can see that the assets have moved. And that's why I tell you that when you see that earnings is moving and your operating cash flow and assets is moving, that it's also a plus. Especially if you look at the No, the cash flow for Dangote for this period, for me, this is a good one. No, the cash flow for the 9 months also moved from no 302.21 billion in 2022 to 460.3 billion in 2023. Good one. With a this no improvement in what in net assets from 838.22 to what 1.37 billion. For me, this is a good one. But on the strength of this 6 naira, no 16 naira 10 kobo, you can easily forecast from here to know that we can see 20 naira or 21 naira earning per share at the end of the day. And don't forget that Dangote has paid 20 naira no for what for the past 2 years. That might also continue on the price of it. Don't forget that investors are looking at what also for stability. This is one of the stocks also you can use the market for defensive stock and also giving you good dividend as above 6%. No, for me, it's a good one. Anywhere in the world, any company delivery, yes, you might say compared to what we're seeing in Treasury B that was we are seeing 11, but there are other stocks that can give you more than that. But I tell you, for preservation of your capital and at the same time for growth, because we know that as government is on board already, we also to see them driving what infrastructure. But the price war in this sector is another thing that we should also look at. How the price war was seen, competition was seen in terms of price of the commodity cement going to play out on their earnings going into the future. These are the things that we also need to consider as what as investors when it comes to looking at these companies, because it's not only just going for the numbers alone. We must look at what will support the numbers going to show. That's why what is going on in terms of the price war, how it's going to affect the company performance is very, very important that investors also consider that to know exactly what to do. Yes, we want to move to the market itself and also look at the chart, but let's look at what is happening in the market right away. That also gives us an insight what to do with our position. Is our market sustaining the early move we saw when the market opened already in the afternoon at this hour? Let's see what the market is doing right away. That will give us also a clue of what is happening. As we speak now, the market is trading at 70,991.28, up by 150.56%. Market is up to 0.18. It's almost 0.2, approximately into 0.2. If you look at the market breadth is strongly green, positive, I mean green. You can see that we are seeing 26 gainers against 13 losers right away. But let's look at the top 5 losers. We are seeing that UPDC have been going up and down. To gain today, it goes down tomorrow. That means people are taking advantage of the volatility in this stock or to take advantage of price. That means I will tell you this is a stock to watch. You see in and out, good volume, people are taking up, down, and taking 30% every day. It is that there's something in this stock that you also need to look at as a trader or investor. Also look at stock like Tamasoas also one of the stock on the top loser, the second one followed by Fertilizer. We are seeing Sovereign Trust Insurance and Regency Insurance. These are the top losers right away on the loser chart. Then if you go to the gainer chart right away, we are seeing that Owando is leading the pack with 10% gain. Trading at what 11 naira 55 kobo, followed by Omatech. Omatech has sustained sorry, yeah, sustained this momentum for almost Monday to date. Market trading around the 77 kobo, up by 10%, followed by Mecure. Mecure, here we also want to point to the regulators. Mecure has sustained the price since it listed on the exchange, 10% gain as a result of what shareholding structure again. You can see the power of structure. We see Mecure has just only 2.44% as what at float. The other ones are still in the major shareholders. That is why we are seeing towards the end of the day. This is the first time we are seeing Mecure around this hour gaining. It was about around 2 o'clock or 150, 140. You see them coming up with just less than either 50 to 150 or 250,000 shares to change the price. Also today, you can see that it's gaining almost 5 naira 21 kobo. Since it listed, it has gained almost like I'll tell you 50%. These are the things that investors are looking at. Those companies that has value also that are on the pipeline, we should also think wise, because this shareholding structure we're seeing the way it's playing over the market, and also it's a call for our regulators in Nigeria to see that when a company is floating, the minimum of what 20% float towards that's what the regulators should know. But I don't know how come NSE and SEC approve this listing, but let's leave it for them. They are the one to answer us. Yes, look at the C&I listing also at this point. It's also up on the bonus declare almost 4 naira 12 kobo. I think this was making a new high. This is the time we are seeing this stuff for almost many years, moving this around above this price. Also, the next one there is Prestige Assurance. These are the top gainers right away as to speak in the market. Then in terms of activities, Owando is also leading activities about 26.28 million shares are traded so far, and the stock is still on bid. Then followed by Japan. Japan is still at 1.89 kobo, 12.9 million shares traded so far. Followed by Aiku and at 73 kobo, 12.2 million shares traded so far. And Chi, 1.04 kobo, 10.76. Hey, Chi, we saw it this morning notifying us that they are meeting with their professionals as regard what? As regard the holding call. And also, all eyes are still on Chi what? On Chi interim dividend as we speak. Then on that same activity start, we are seeing the Transcorp is the last in the top five, 6.8 million shares traded so far at 6 naira 5 kobo. You can see that the price of Transcorp have been going up to 650 back to 6 naira. But this oscillation also have continued. Keep your eyes on this stock again. On this note, we quickly go to what to go to the chart. Let's look at what is happening. Looking at the chart, the chart has also go into another consolidation. You can see it all this way from here to here. Even though when it's making higher high, we saw that the market have the kind of have recorded a test of 71,138 before pulling back to place in the red the previous day on Monday for a rebound on Tuesday. That trend is being sustained now. Another breakout of this 71,138 will now consider that yes, a new trend has also come, a new all-time high has also. But as we speak now, market is also a form of consolidating at this level. And don't forget that when I say that when market consolidates for a long time, it's not too good at that particular time. You can start seeing that for a long time you'll be expecting to see a breakout. But if you take the cursor here, so you can see what I mean by consolidation, the range that market is at this point. Yeah, here's the range. You can see the other top where it tested here. Take it here. Okay, yeah, take it here. You can see here that it's still within what you can see. This is the right angle was seen from here to here. A breakout here, and this also when you see a supply here, good supply might also pull back the number. Let's watch and see. Also a decline in volume yesterday. Let's watch today. So we're not seeing much volume, and don't forget that today all eyes are still on what on inflation data in Nigeria. I think once all this data comes, was going to give more insight ahead of what the MPC meeting on the 21st and the 22nd. These are the things that we believe that will shape the market. As we speak, let's keep our fingers crossed and watch where the market is going from here. For me, there's no cause for alarm. Rather, to just sit and watch where the market is going. But market is still making higher high. There's no cause for alarm at all. Yes, I can tell you that within this period, a breakout up is possible and what a correction down. But at this point, the market is now. When I say we should start edging against edging against the down market is because it's necessary. And also, we're already in a end of the year seasonality, which we know that yes, it should play out. With these earnings we have seen direction where yield is going. Even what we are seeing in the physical market, we are not threatening the equity market. But let something happen at the MPC meeting that is not too palatable. But that's why we must also edge against down market, and also as we're edging against inflation with the market. These are the things that you need to do at this particular time. Yes, let's call up our indicators. Let's look at let's start with the our MACD. So let's use ADS this morning. Let's look at ADS this morning. What is ADS reading, and also come and see money flow and our ADS, our T line. For those that I need to understand the T line very well. Yes. Looking at the market now, you can see that our market is trading above the T line. You can see, but I would like to zoom it for us to be clear what the market is doing right away. We need to know ourselves. See that the market is above the T line where it is, and also you can see within the right angle a breakout of this also confirm a new uptrend where the market is now. That's why we want to keep our eyes at this line. Line is very, very important. When you saw this trend line, we have seen either downline, downtrend, and uptrend. Watch the line. Trend lines are very, very important. They guide you towards the next action. That's why I don't joke with it, and any technician also don't joke with trend line. You can see it here that market, looking at ADS, market is still can see strong momentum in the market. Like I showed you day before yesterday with another chart. I showed you, that we are seeing a good momentum. Right now, we are seeing that no, the momentum is still very strong. But money flow, we saw it this morning to yesterday, coming as low as almost 70, 78, no, down from almost 800. But this morning, I think that it's also going up now. I speak now, money flow is already reading 85. For me, it's a good one at this point now. Coming back to the level of what we saw when the market was generating what around May, June, and all those stuff. You can see here, the market is in that level now. You can see the momentum, the front enter the market. That means even this month, we are seeing that, okay, that means that possible that we are seeing what the inflation going to look like. Market are not responding to see. They are not waiting to see the number. They're already taking action. For me, let's keep Africa and see the inflation data for us to know. This is that the market is still very, very strong. And this is what a daily chart is still in green. Money flow is looking up. Let's look at the 1 hour chart as time permits us because our time is fast spent. Let's look at 1 hour chart. On 1 hour chart, we're seeing that money flow is also reading almost 70, and also ADS is still positive. You can see it here. Look, ADS is around what? Around 33 for 1 hour. For me, it's a good one that ADS is reading 33. I told you earlier in this class that once ADS is above what? Above 20, it shows strength. Look at the 15-minute chart. For 15-minute chart, you can see that also that the market is also above the T line. That is very, very important. Even when they are within the, you can see it here, above the T line here. And money flow is slightly below 20 on 15 minutes, around 18, still not bad. And sorry, ADS is around the 18. Money flow is looking down to read the 76. For me, let's keep Africa plus 15 minutes chart. For what matters is that look at 1 hour, 4 hours, and what, and the day chart. Let's look at 4 hours to confirm the state of the world. I think that on 1 hour, the market is very, very strong. 1 hour chart. Also on 4 hour chart, I see that market is still very, very strong. I think that they're still above the T line here and see it here. And also, ADS is still very strong, reading around the 41.7 for me is a good one. And money flow is reading, to speak, 71 on 4 hours chart. It is a good one. You can see that both 1 hour, a day, and the 4 hours are moving in this direction. It tells that the market is strong. But despite this sign, this momentum is very, very strong. Factor in your what? Your profit taking strategy in, because I tell you, you must hedge against what downturn. And also, when you are profit, take profit. For those stocks you are entering now, watch to see. Don't set a big profit target. The ones that you're able to take that will cover your costs and also make profit fine. Because market can correct any time. Also, but because you are in the what's called end of the year seasonality, yes, we will see oscillation up and down until the end of the year, which will rally that will come at the end of the year, and what and central price will come between the 18th to 24th of December. But yes, you had the year end, but I tell you, the major insight will come from this figure we are expecting to the inflation figure and the outcome of what are the MPC. We have an insight what is likely to happen in terms of dividend from companies of their third quarter performance, which is also good. But we want to know what will the inflation be looking like, and also that of what the outcome of MPC. There's no cause for alarm. Let's keep our finger crossed. Yes, let's quickly look at a few stocks that are on the gainer start this morning. Let's start from Owando again. We say Owando. Let's start with Owando. Let's see what the strength Owando has now. How far will Owando go this morning? Should I still jump into Owando from Owando to try go? Let's look at Owando on 4 hour start. You can see that it's still positive, even as it's gone as high as 150 something. Profit taking, you can see it on this candlestick here. There's also profit taking activities already in the stock, but don't worry, because it has broken out the latest resistance level at this point here. It's above it. But that what if it's sustaining, continue fine. We'll be targeting what another 16 again, but now it's above what 11 already, and this is another major resistance level which has broken down today. Let's keep our finger crossed and see how far it's going to go. But my ADS is reading 23, which is also good, and money flow is also reading 83 on 4 hour chart. Quickly look at the 1 hour chart. What is happening in the stock? 1 hour chart right now, there's a sharp movement here. You can see it here, sharp bullish candlestick without any dot. You can see, for me, this is strong for one. This way they can tell you, looking at this hours, 1 hour, 4 hours, and a day is very, very important. On the 4 hours and a day, we've seen a strong candlestick for Owando, and also money flow is reading what 86. I consider also ADS is also reading 41 for 1 hour chart. You look for a day chart to see the performance. On a day chart, you can see yesterday we saw the stock going outside this 11. It came down for this morning. That is at this a day chart. Then it is the position is also extending up, and we're seeing that the ADS is just coming up. It's now reading the 20.9 as we speak now on a day chart, and money flows already at what, at 88 on a daily time frame. For me, these are good signs for Ovando. There's no cause for alarm. Finally, let's look at what is Chi doing at this point. Chi PSC, that's the stop. The last stop we're looking at this hour. Chi PSC. Let's look at what is Chi PSC doing. No, let's get stop. CPSC on a day chart is resisting decline. You can see it here, but about to cross the T line. This is a good sign. You can see the buying position already. You can see green here, but the ADS is relatively low, weak. We're seeing around 12.2, but 12.2, which is also, our money flow is still looking up gradually, but still below 50 to read around 22. This is a good sign that is coming up for those that are thinking long and medium. I think this is over. Once they cross this T line, on this we're looking at a day chart now. We look at what 1 hour chart for Chi to see that Chi on the 1 hour. You can see that the last time it was that gain was still above the T line, slightly above the T line, and we're seeing that money flow is also low, around the 11.5. Funds are not entering much as we speak now. So we're seeing a good volume coming up here, green one, good one. But let's totally look at what the 4 hours before we call it a day. 4 hours start telling us that the stock is flat here. You can see top and flat on the T line. And money flow is also looking up gradually to read the 24. And also we're seeing that the ADS already around 20.74. For me, that's why I said that there's a positive that this stock will break out very soon on the indicators we're seeing. We're seeing a good combined positives and technicals for the stock. On this note, I'll say thank you for your time. And also, I want to briefly encourage those that have paid, but seeing a good number of people that are really paying for you to really prepare for 2024 already. We're seeing that 2024 is already setting up. So also already downloading forward for dividend season, and you must prepare for that season that will come in 2024, especially in the first quarter. And that's why you must not miss the coming World Invest 2024. Good response we have seen, but I need to encourage more of you to be there so that you can take advantage of what we're going to share before we enter the year, and we start positioning ahead of the year. And also bring it to your notice that our daily class as from next week will be Monday, Wednesday, and Friday. Yeah, so that we'll have time to do that is Monday, Wednesday, and Friday, starting from next week, hopefully by God's grace. On this note, I'll say thank you and see you, on Friday again. Thank you and God bless you. Bye.